All right, welcome everyone. This is Bob Maurer. It is around about 2:40ish my time on Friday the 7th of March. I want to do a review of our current seasonal futures spreads strategies, see how things are evolving for the ongoing spreads. And without further ado, let's hop on into it. All right, here we go. Dialing into the portal, clicking on the most recent PDF, just uploaded a bit ago for this upcoming week, March 9. Here we go. We are down to these 5, although the top row did hit its profit target. So we'll look at that one. So 346 top row, lean hog, bear spread. We are flat. 347 bull spread in cotton. That one is evolving. We'll take a look at that one as crude oil number 348. And then we got 350 is a bear spread in live cattle, no fill as of yet, and 351 bear spread in feeder cattle, no fill as of yet. All right, so let's hop on over into the charts and see how things came about. All right, first of all, bear spread, lean hogs, number 346. We had our first target at 47.5, and on Tuesday it broke on down to that. Actually through that by a few ticks. Looks like the low was 40. Fortunately, we got filled, and thankfully, we did not stick around because the market in the next 3 days, the following 3 days, including today, pushed into 3 higher highs and right up towards the top end of the range that it came out of. So we are happy to be out. All right, so this one turned out to be profitable. Got that on Tuesday. And worst case scenario, I did revise this on 3-3. Hopefully, you all caught on to that, saw that, and the revision was dropping the stop down to 112. So maybe worst case scenario, average in traders would have broken about even, and the entry level 2 traders, if you didn't get filled at this 47 for whatever reason, were able to liquidate with some unrealized or some realized gains. So this one turned out to be a winner. It's going to go off the board as a winner with some level of realized gain. Number 346, that was the bear spread in lean hogs. All right, then we've got cotton, full spread. Look at this here. Bear with me a second. Okay, so I revised the targets on 3-3, and we've only been filled at level 1. 2 days ago on Wednesday, it got down to a low of negative 135. Our entry level 2 is negative 137. And after it probed down, closed up at the higher end of the range on that day, and we had follow through yesterday and a relatively decent close. Again, yesterday's high was negative 106. Today's high was negative 107. So we did not make a new high today relative to yesterday, but still closed right up at the top of the range. So hopefully that bodes well for us, and maybe we get a shot at this negative 86 into next week. This white line here is the 200-day moving average. It tends to be border resistance depending on how you're coming at it. But back here out of the gate, you can see that it didn't really pose as much resistance, and maybe that'll happen again, which is what we needed to happen. Trade is prerogative. If you're in at the negative 109 and for some reason you don't think it's going to be able to power through the 200-day moving average, you can always take a small gainer of 12, 13 points or so and get out just below that. So it's totally up to you. I'm going to stick around for the negative 186. Data still supports it, so I'm going to go with it. And it was able to break through, like I said, out of the gate early on in the spread. So maybe that'll happen again for us. Okay, so that's strategy number 347. So far, only one level is filled, just missed level 2. So fortunately for the more conservative traders who've been sitting there with your bids, doesn't look like you do a fill. But for the 109s, the entry level 1 traders, currently you're sitting right about break even, which is better than it was a couple days ago. So far so good, all going according to plan. And outside of the revisions, no change to the plan as of yet. Next one we've got here is the crude oil. All right, so this one off the board officially tomorrow. So it's trade's prerogative as to whether or not you want to get out today. There's still time today, and or Monday. My preference is to get out today. Right now, currently sitting with a very modest gain. The only entry level we've been working with here is 39. I revised this back on 3.3 and canceled the level underneath, level 2, entry level 2, and raised the stop to 29. So that's all we're working with. Currently, the market is literally as we speak at 41, so just a 2 point gainer at best at some point throughout the day. Today's high was 45, so you might have had 5-6 points in it. So not much of a gain nor loss so far. So this one looks like it's going to go off the board as maybe a scratch to maybe a bit of a gainer if you get out now, or maybe by the end of the close, or by the end of the day at the close. So we'll see how that actually settles up. But be sure to try and get out today if that's your approach, unless you want to take on the weekend risk, and that's up to you. All right, so that's 348 off the board as of the close today, or sometime throughout the day today. Looks like it's going to be or could be steady to better on the P&L. Next, we got live cattle, bear spread. Now, this one and the next one are both in the beef. So, as I think I mentioned before, if you don't want to get overly weighted in one particular commodity, then you might want to choose one or the other. So this is the fat cattle. The next one I'm going to talk about, 351, is the feeder cattle. And walking this forward, I want to shift the whole thing up. Hey, apologies for that phone ring. I had to grab that call. So back at this, I am raising this template on this strategy. Walking it forward, I think that we can and probably should look for a little bit higher. So entry levels 1 and 2 are going to go up from 240 up to 265. For level 1, I'm looking at what's in orange here. And then for level 2, I'm going from 282 up to 3.25, 325. Okay, so those are going to be our new entry levels. And then our stop is going to move away also. It's going to go up from 382 up to 420. And then our targets also underneath are going to be raised a bit. Target 1 is going to go from 105 up to 117. And target 2 is going to go from 30 up to 90. All right. So the whole thing is being raised. So when I change it, here's what we're going to be looking at. Get rid of all of these. And we're going to shift these over. All right. So then it's going to go to 325 for the entry. Bear with me while I just make this all look good. And then our stop level is going to be 420. And our first target is going to be a price of 117 half. All right, so that's the new visual. And then our target 2 is going to be up here at 90. Yep. All right, so that's what we got going on now. The revised stop is going to be 420. Entry level 2, 3.25. Entry level 1, 265. All right. And that's what we got going on there. So we're basically pushing everything up just a tad, and that's just based on me walking this forward. Uh, Higher probability of a higher move than I'd initially anticipated based on where the benchmark started at 157, but now that we're here at 222 today's close, and we are 7, 8, 9 trading days into the seasonal, I think this is the prudent thing to do. Could we miss it? Yep, we could miss it, but I'd rather do it our way, stick with our plan. So the risk reward is going to change, obviously, but not too bad. So the regular entry had been a risk of 400. Now it's going down to 380. But with that comes either a little plus or minus on the targets for the gains. And then for the average in entry level down here in yellow on the bottom left, the average risk per two lot when you average in to be a little shy of 1,000. Now it's going to be exactly 1,000. So that came up modestly. And the targets, though, either improved or modestly a little bit lower. Okay. And even for level one, it improved by about $50. So the risk reward changed, but not dramatically. And we're still looking for the same approach. We need this thing to rally and then break. Generally speaking, it's in a big range. I know that we had this little spike up here in back in late January, early February, but for the most part, it's been say roughly around from 3 cents differential to down here at about $1, so about a 2 cent differential. All right, so that is strategy number 350. Major revisions. Get on your platforms, tweak your entries, or call your brokers, or call your trade desk if you want to follow along with those revisions. Okay. Everything's always trader's prerogative. If you want to stick with the original system because it lines up with whatever you're looking at, it's totally up to you. Okay, so that is strategy 350. And last but not least, we've got feeder cattle number 351. And this one, there are no changes to this one. We're going to keep everything as is for now. So this is the long August, short May, strategy 351. Let's see what's happened. Not much. So this thing started on Feb 27, goes to May 4. Really long window, and it's feeder cattle. So my guess is that it's not going to take as long to work one way or the other. We need this thing to rally a bit. We only have one entry level up here at negative 165. All the targets are still the same. They're still all in play. And in the last 5, 6 trading days since this window started, we've had a high of negative 215 and a little spike low of negative 397. So that's roughly what, 180 points, which equates to $900 move. So that's why we got these big potential profits. Because if this thing gets moving, it can move in a hurry, and it's $500 per dollar in this commodity. So it can be a big mover, bottom line. Okay, so it's a wait and see. No fill as of yet. No change to the strategy. As again, we just need some kind of catalyst to push this up. Looking just basically Fibonacci's. These aren't the end all and be all of anything. Don't get me wrong. But looking at this swing high made back on Feb 3, and then the spike low made just today. You use that high and that low, comes to a midpoint, 50% retracement at about negative 212, puts it at the high end of this range right here, which is maybe why this thing sold off, 4 or 5 days ago. The 618 retracement, the next level up, comes at negative 170. We're at negative 165, so just 2 ticks above that. So maybe if that first Fibonacci retracement to negative 212 doesn't hold and you get a retest of it, maybe it'll try the 618 and then back off, right? That'd be the ideal scenario for us. Okay, so we'll see how it all plays out with this one. Feeder cattle can be pretty volatile. It's not the most liquid market. So again, you don't want to get overly weighted in the beef sector. You can choose to either do that live cattle we just came off of talking about, or do this feeder cattle. Or if you're a risk taker and you're cool with it, Do them both. Okay. So I think that brings everything up to speed. If you have any questions, comments, anything of interest, feel free to let me know. I'm going to leave it there. And thanks so much for watching.